Jonathan Krinsky is the chief market technician at BTIG. You are there. I see you. Can you hear me?
I got you, Scott.
Okay, good stuff. I mentioned some of the things in the market today. Chips led on the way down. They're having a nice bump. Are we near the bottom, do you think?
So, there's always the two questions. There's the bottom and there's a bottom. And we were on with you last week, and we kind of highlighted that there were some of our capitulation checklist signals that did get checked, enough that we thought we could get a nice rally back up to 4,200. But we thought it wasn't going to be the ultimate bottom. And, I think the action yesterday really speaks to the fact that, you guys are having the conversation, are we in a bull or bear market? There's many different ways to define it. We would argue you are in a bear market, and, the action you saw yesterday is just not consistent with the bull market activity, right? And so the question is, not so much how high can we go, it's are we done with this downtrend? And I think the answer from our work is no. One of the things that we have been looking for is, finally all the different areas of the market that have been holding up well to finally get hit. And yesterday we got the consumer staples. They were one of the best performing areas of the market. Yesterday was actually only the sixth time in our data back to 1990 where we had consumer staples and consumer discretionary down 6% or more on the same day. And so really that leaves utilities and energy are really the two remaining holdouts in the market, along with some of the mega cap tech names, which have started to break down at this point. So ultimately, could we have some more chop throughout the summer? I think that's perfectly reasonable, but we see 3,400, 3,500 in the S&P as kind of the ultimate downside.
What's it tell you that the VIX is falling today and it's 30? VIX is at 30.
Yeah, the volatility side of things is one of the areas that, we felt has not triggered that full-fledged capitulation. We actually look more so than the absolute level of VIX. If you look at pretty much every durable bottom over the last 20 years, you get a point where spot VIX relative to the second or third month VIX future actually is at like a 10-point premium. And we just haven't seen anything close to that throughout the entire year, really. Even yesterday, on yesterday's move, it was barely inverted at all. So, the fact that it's hanging around 30 today, I don't think is that meaningful. I think really in true panic, you get that inversion. We haven't seen that at all.